Traders, welcome back to another price action trading lesson. We're looking at S&P 500 E-mini futures. The time frame is 2000 tick chart, and the very first thing I need to do as a price action trader before I'm going to start trading in today's session is I need to analyze the overall market structure because I want to understand the environment I'm in. I want to understand where the market is heading. And right now I can see there is pretty much no bias. We're just going sideways. So once we're going sideways, I'm going to assume we are in some form of consolidation. I have my support a little bit lower, far from the most recent structure, most recent price action, but this is pretty much what I'm going to work with. I can always adjust it as I get more information. And also, since I'm part of this consolidating structure, I'm going to follow the short-term trend line rule because I expect trends to pivot fairly quickly. So as you can see, there's always trend line present for every single move. So this is the structure I'm navigating. So pretty much I expect right now continuation of the sideways price action while I'm following these short-term trend line rules. That's how I'm going to stay on the right side of the market. Market is correcting. I can actually also draw a little bit of an overshoot. We have uptrend working higher. We have a lower high here, but problem is it is still part of this one push working higher. So I can't really take it because the uptrend is still in play. And it is very close to market open. The market is going to open pretty much at this point. We have a break in new high, so uptrend played out, which is a good sign that this bullish correction is over because you have a break in new high. Now we have tick high reversal down. This was a very tempting setup. This was very tempting setup because the correction played out. The downtrend needs to get new extreme according to trendline rule. But problem is it is exactly around the market open, and we don't really trade exactly around the open because there can be a little spike in volatility. There can be a little fake out trap. So for this reason, you want to wait at least a few minutes around the open to stay safe. There was no lower high, and downtrend played out with a break and pushed to a new extreme. This low is lower than the previous low. So right now the downtrend played out. We have right now no bias. Okay, so I'm just going to follow the short-term trend line rule. Something like this. I'm waiting for more information because it seems a little bit too sideways. What I'm going to do though is I can see prices bouncing off of this area. So I'm going to move my support higher because it seems like it's not even being used this far down. This fits much better. And also initially I had my key level higher like this. But as I can see, this being kind of like a smaller trend range, I moved it a little bit lower because this makes the price action fit better overall. You can see we're still part of the trend range. So let's see what's going to happen. We have a spike up break in new high. So here you can draw wider channel, but it's a little bit too early for this. We have a one leg up, broad break, second leg up. And because I'm in the trend range, I'm going to follow mainly these shortened channels. So I'm not really drawing wider channel just yet. I cannot go long here. Number one, we have a downtrend in play. You can see this is a second entry long, but the downtrend is in play. And this channel needs a bit more confirmation. We just had a break in new high, so it's what's going to happen. If anything, I was thinking that we may actually get a felt second entry long below EMA. It didn't happen. It happened a little bit later. Had there been felt second entry long here, you can actually consider. Okay. Market is trending higher. Initially, I drew my trend line a little bit wider, expecting second entry short. As I can see, price is breaking above EMA. I'm going to draw a little bit tighter like this. So, not easy environment to navigate because market is whipsawing up and down without a bias. Remember, as a price action trader, you can only gain an edge in the market if everything aligns. If there's good context, you have good key entry point and good pattern. So if I'm trading a structure like this, where we're just whipsawing up and down, we're not close to these key levels, I'm pretty much very patient because nothing really is established. You have to be objective and you have to be honest with yourself, and nothing is fully established. So I'm just going to wait a little bit. Okay, I was looking for second entry long following short trend line. We broke lower, so I'm disregarding this trend line now. Very whipsawy price action. Okay, market is working lower. I'm going to draw now this downtrend, something like this. This is significant push down. You want these moves to be proportionate. You can't really draw this break in extreme and not really being able to explain this push down. You have to be able to explain why prices are trending lower like this, even after this two-legged pullback. This means there's a brand new downtrend in play. I was looking for second entry short at the EMA to test the new extreme. Even if you are trading a trend range, you still follow the trend line rule as a default. Yes, we are close to support, but had there been some nice second entry short close to the EMA, I would still consider because the downtrend is new low. And downtrend once again played out with the break in extreme. So I'm going to pause looking to go short because as you can see, we're working with the important key levels. You don't have to be perfect. You're just getting the information that market is bouncing throughout this area. So this is the important price level where a lot of buyers are buying. So you already know the downtrend played out and you're at the key level. So you have Two important reasons to expect right now: influx of buyers. Price action will tell you everything. What happened to the left is going to help you predict what's going to happen to the right. So you are thinking bullish. Ideally, if you will get some failed second entry short above EMA, reverse a pattern because the buyers are stepping in, downtrend played out. You have a high low here, but problem is this high low, the signal bar is quite sketchy, and now you have a failed second entry short, but you can't really take failed second entry short above bearish bar. So context is starting to look quite decent, but you know, had there been good failed second entry short with the bullish bar, you can actually go long. You can't really go long now because it's too big, too far up. Okay, I'm thinking about second entry long at the EMA. That never happened, and breaking new high again. So I'm following short-term trend lines. Uptrend played out. No setup so far. You know, if you take this high low, if you have some better bar, you can consider it's not a horrible setup. We're going quite sideways, new low, push above EMA, but I need slightly better bar. I'm going to redraw the short-term downtrend. A new high first entry long, tiny one tick, second entry long failure, but of course I cannot sell below this bar. Micro double bottom forces me to reset the count. Downtrend play with the breaking extreme. New low. I'm going to redraw the downtrend working lower like this. It looks like a clean one leg working lower, clean push down. We have a second entry short. Can I take this second entry short? Not just yet, because I have uptrend working higher. I cannot draw such a tiny uptrend like this. Moves have to be proportionate. This is too micro. This is too tiny. There cannot be a channel for one bar, and then you have 4 bars that are so much larger. Okay, the moves have to be proportionate. So I'm drawing this uptrend respecting the correction, but I expect new extreme. Can I get a lower high? And now I have lower high confirmation setup. New high for a century long that failed. Lower high confirmation setup confirming the second entry short. We're at the EMA. This downtrend needs to get an extreme, and this is great hyper setup, capitalizing on all price action rules. Okay, because the downtrend is new low, you are at the key entry point, and it's a lower high pattern confirming the second entry short. So you can see once everything aligns, this is where you want to sell, and a great push to a new extreme following price action rules. Downtrend played out with the break in extreme, so I'm going to pause once again, looking to go short. We are close to the key level, so you already expect influx of buyers. Actually, we have new low first entry short, second entry short failure, you know, but I prefer failed second entry short to be mainly above EMA. I want to see the second entry short itself be above EMA. So if I see failed second entry short like this below, I am thinking about potential high low confirmation setup, which we have here. The high would be great setup. High low confirming this failed second entry short. Downtrend play with the break new extreme, indicating okay, sellers are over. We are bouncing off the important support. Sellers are done. Push above EMA is indicating okay, buyers are taking over. This is why we have the EMA, because once you see the push above EMA, that's confirming okay, EMA is holding. The buyers are regaining control, and the high low confirmations that would be good. I can mark it, but it didn't get a trigger. Unfortunately, it didn't get a trigger. The signal bar must have a trigger. There's no break here, so I fortunately cannot take it. Market is working high. I'm going to make it a little bit wider because the break is super tiny like this. I'm looking for second entry long at the EMA, but I can't get it. Once again, we have a bunch of small breaks, but the breaks are so tiny. It still visually looks like a one push working higher. You can't even touch the EMA. Visually looks like a one push working higher. The channel still looks pretty much intact. You can't even touch the EMA. This is very strong structure. So I'm going to make it a little bit wider. I don't think there is a break, a new high, because breaks should be really proportionate. This is such a tiny break. It makes sense to treat this as uptrend still in place. So I'm still thinking about second entry long at the EMA. Okay, we're correcting. So now we have new high first entry long, and I'm thinking about second entry long. Tick lower, and then working high like this. Do we need to get new low for this downtrend? We don't. There doesn't have to be new low for this downtrend. Attempt is enough. Attempt would be new low, first entry short, and failing. Okay, so that's the attempt. Downtrend, break, attempt to test the new low, but it's going to fail because this uptrend is the bigger pattern, and bigger pattern price action takes precedence. We expect new high, but there was no break below. As you can see, there is no first entry short. There is no pullback. New low. Where's the first entry short? Where are the trap sellers? So this is only first entry long. Unfortunately, great context, but we don't have good pattern to take advantage. Here you have nice context, nice key entry point, but we are missing the pattern. We are missing the second entry long. So we can't really take it. Break a new high, uptrend played out. So I'm going to pause, looking to go long. You have a second entry long, but pattern means nothing without a context. Now the uptrend played out to break new high, so we cannot go long at the top of the move after trend line played out. You know, this is interesting setup. It's a bit harder setup to take. You have a new high first entry long, second entry long failure. You have failed second entry long. The thing to remember is that we were part of a consolidation the entire day. So it makes sense to bet on some continuation into the trend range because that's what you expect according to your rules. But it does look a little bit bullish here. It's not such a swift reversal. More advanced trader can consider. But it is more advanced because we're going quite sideways. So there's some small support. Uptrend did play out, so you can consider failed second entry long, but it's a little bit more advanced. Break a new low. Everything played out, so now I'm being patient because everything on my chart played out. We're going back up. Okay. Second entry long, but I can't take it. You have a downtrend in play, and there's no good pattern. At this point, especially if I'm working with higher time frame, I can also draw just a slightly wider channel like this in hindsight. But even this channel now has a break and push to new high. I can't really draw a channel like this because it's too broad. There's so much empty room here. Where are the confirmations here? It's looking like one steep leg working higher, very broad consolidation, and a second steep leg working higher. This is not how trending structure looks. You should have consistent series of high highs and high lows, not one steep leg, broad pullback, and another steep leg. Okay, you can only draw wider channel if you have more high highs and high lows. This is too early, no confirmations. It's better to follow the most recent structure. You can see this is the most recent structure. You can see how nicely price action is fitting inside of this channel. Break new high. It looks like it. It acts like it. So I can't really take second entry long now. Even though it ended up working. At this point I think it's too early to take reversal. This is pretty much similar to what happened here. It looks quite similar, but at this point it got a little bit too bullish, so we can't take it. New low first entry short, second entry. Actually, there's no second entry short because there's new low first entry short. Trigger below this bar, but there is no break high. There's no first entry long. So there is just part of first entry short. Break a new low, downtrend played out. And now everything on my chart played out. There is no trend that is in play. So this is no trade zone. I cannot take a gamble. I cannot take a setup when I don't have a good context and good key entry point. Okay, we are breaking higher. So now I finally understand what's happening. I'm getting a little bit more information. So what I like doing is drawing this consolidation because we have EMA consistent price swings. And because downtrend played out without reversal, I'm gonna now draw uptrend like this. So the support is holding. We have an uptrend in play. Downtrend played out. So I'm thinking about second entry long, new high first entry long. We're thinking about something that happened right here. Can I get a second entry long? No. New high first entry long. Pull back second entry long here. I cannot take it. And now we have new low, first entry short, pull back, second entry short failure. Nice bullish bar above the EMA. Support held. It looks like a trend range. We need to get new high following this trendline rule. The market geometry fits well. So we're going to combine the rule of the trend line indicating we're going to go higher. The support is holding. There's no reason for sales because downtrend played out. And this is great. High probability setup. Felt second entry short because the uptrend needs new high. Spiked to new high. Uptrend played out. And now we're just going sideways. Everything played out. I pretty much can't take anything. We're back above the EMA. Downtrend played out. And I can see it's getting too late. We generally want to stop trading like 30 minutes before the close because everyone is taking profits and it can be too choppy. So this is the structure for today. Finally, the market slowed down. The bars are still very, very big. So we still have to adjust our risk to reward ratio. You have to increase the target profit. Generally, you want to reach for something like 1-to-1 risk to reward, or your reward can be a little bit smaller, 3/4, because that's generally what scalping 8 to 10 ticks is in the normal environment. So because bars are bigger and your stop loss is bigger, you need to increase your target profit. Don't forget this, because you cannot be scalping 8 ticks. This is such a tiny amount when bars are this big. You're going to place the order in and you're going to get out instantly without you even noticing. So you need to increase the target profit, reach something close to 1-to-1, and then maybe lower a little bit, because we are scalpers. So it's okay to have smaller risk to reward ratio, because it's easier to predict. Tiny move, the win rate is much higher. But yeah, this is the overall structure for today. There were a few great setups, not that many of them, but I like actually that the market is back to normal. I like the fact that price action is slower. We just need bars to get a little bit smaller so we can trade comfortably without crazy risk to reward ratio. But it's good to see market back to normal because you have time to decide, you have time to draw these key levels, and that's much easier to navigate. So I hope you had a good trading day. I'm gonna wrap it up. I'm gonna talk to you next time. Good luck in your trading.